Hey everyone, so just want to show the Wealthsimple account. We're going to go into the actual holdings within each account. So this is on Wealthsimple. They have their self-directed platform, which is called stocks, ETFs, and crypto. And then they also have their managed investing or their robo-advisor service. I use both. But we'll start in the stocks and ETF side of things. I don't use crypto at all, but through this platform, you also have the ability to buy crypto if you want to, which I do not recommend as an investment choice. So when we go in here, I've got three different accounts. I've got non-registered, which is essentially an unlimited account where you can deposit as much money as you want, make as much money within it. And you do pay taxes though on the dividends you receive, as well as when you sell your holdings, you pay taxes on the capital gains of only the profits that you make. So you only pay taxes on the profits that you make. I also have the RRSP, which is a retirement account. This account is where you can put in money that you earn from your income up to 18% of your income. And then there's a maximum per year or based on that. And then you're able to actually deduct that amount that you contribute to your RSP, deduct it from your taxes to reduce your tax bill in the current year. So if you're in a higher income bracket, you're able to then deduct that from your deduct the RSP contribution from your income, reduce your income tax that you'll be paying now, but then you are just tax deferring through this account. And so in the future, when you're retired and you withdraw the money, you will have to pay income tax on every dollar that you withdraw. And so it's not really a tax-free account at all, but your money is growing within the account tax-free. You only pay tax when you withdraw money from the RSP. And then lastly, we have the tax-free savings account. This account is tax-free in that any money that you make within the account, whether it's dividends or if you sell off an investment, when you withdraw that money from this account, there is no taxes that you'll be paying. One of the downsides, though, with the tax-free savings account is the annual contribution limit is fairly low. Right now for 2024, it's $7,000, whereas with the RSP, if it's 18% of your income, obviously, if you make $100,000 a year, that's 18,000 right there that you're able to contribute. So tax-free savings account is a lot more limited in terms of the amount you're able to contribute. The other important thing to note is that although it's called tax-free, you're contributing after tax dollars. So you've already paid tax on any money that you're depositing to the account. So nothing in life is really truly tax-free. With the RSP, it's tax deferred, as in that you're paying taxes later, whereas with the tax-free savings account, you're paying tax on any money you put into the account. But through the account, any money that you make, then that fully is tax-free. So we'll go into each of them. We'll start with the tax-free savings account. So these are my three holdings. We'll start with the cash ETF. So this is a ETF by Horizons. It is offering right now, it's a 5.15% annual dividend that it pays out. It really counts as like an interest payment that you receive. And how this ETF works is quite different than other ETFs that you probably come across. This ETF deposits the money that you're investing into high interest savings accounts at Scotiabank, CIBC, and National Bank. And so the investment or the funds are invested and kind of deposited to those bank accounts at top banks in Canada, very highly profitable banks, very highly regulated banks, so very secure investment option. One thing important to note though is that because you're buying this through as an exchange traded fund, it is exempt from the Canadian Deposit Insurance Corporation. And so if those three banks were to go bankrupt, your money is not guaranteed versus if you were to open up a bank account at one of those banks or any insured bank in Canada. And if you were to withdraw your money, if the bank goes bankrupt, your money is guaranteed up to, I believe it's about 100,000, or there's certain thresholds based on account types. You would not be eligible for that through this investment type. So it's just something to be aware of. But I'm personally not worried about it because in Canada, our banks are incredibly profitable, incredibly regulated. So I don't see that as an outcome that would happen in terms of the federal government allowing a bank to go bankrupt. They would inject money to reverse course, but our banks in Canada are so profitable that I don't even see that being a possibility. So with this ETF, how it works is you buy in towards the beginning of the month, either exactly at $50, it's the last business day of the month, and then the first kind of few days of the month. So you buy in right at $50 or kind of, a few cents. And how it works is as the account accrues interest, the value of the ETF goes up slowly over the course of the month. And then on the last day of the month, the value drops. So here we see on January 30th, they take the all the money that's accumulated, they prepare it for a dividend distribution, and then you actually would receive that shortly afterwards. So it's a very wonky ETF in that it's constantly going up and then it drops back down, goes back up, drops down. So if you were to buy it at $50 and then sell it at $50, on paper, there is no gain that you're receiving, but it really is that dividend payment that you're receiving on a monthly basis. So this is a really excellent liquid option. It's kind of like owning a GIC in that you're getting that 5.15%, but you're able to take the money out at any time. So I really like it for that reason. If you're able to find a high interest savings account that offers above 5.15%, I think that's also an excellent option. It's really the same thing. The main convenience here, though, is that Horizons is doing the work to get those promo offers to negotiate the rates with the banks. And so you just deposit your money here and it's being deposited into those high interest savings accounts. Versus if you were to go invest on your own, you would often have to be, constantly switching banks to take advantage of the latest promotions. Then I have, these are my three favorite ETFs. So this is the TD International Equity ETF. So it's about 4,000 international companies around the world. This ETF hasn't been doing super well lately. So we can see, it's up to 23.34 over the last 5 years. If we were to roughly average that, it's like around 4% or so. The thing about this is that there has been a lot of international conflicts that have definitely impacted the performance of this ETF, but I definitely do think that it is worthwhile to hold and to diversify your money internationally. And then VCE, this is the top 40 or so Canadian companies. So all your big brands like, Superstore, Loblaws, all the top banks, Enbridge, all the oil and gas companies, they're all within this ETF. This one's done quite well. As you can see here, massive drop during COVID, but overall it's performed quite well. Also other than the 2022 kind of turbulent year. Over the last, 3 to 6 months, though, it's been doing quite well. And then the other one I'll show you is VFV. This is the S&P 500, the largest 500 companies in the US. And this one has been doing incredibly well. And it's actually an all-time high right now, at just over $120. So if we look over the last 5 years, obviously we see our big COVID dip, we see it grow quite a bit, and then 2022 happens. And since October, because there was that big dip in October, since then it's just been on fire and an all-time high. So I'm doing my regular weekly dollar cost averaging into VFB, and then we'll switch accounts and I'll show you also what I've been investing in my RRSP. So I've also started getting back into VUN, which is the total US stock market. It's a few thousand of all the US companies. And then HXQ, which is the NASDAQ 100. It's the top 100 US predominantly tech companies. So I have $1,000 weekly deposit that goes to Wealthsimple. And I believe, I'm not sure if I'm able to see it on the web portal, but on the app, if you go to your profile and then automations, that's where it would show. But I believe it's $500 to VFB, and then like $2,500 to VUN, $2,500 to X or HXQ, something like that. But I'm basically 100% of my contribution is going towards US. I believe I'm at about 50% of my total portfolio is invested in US, and I want to get closer to like 75-80%. That's my goal. And last account I'll quickly show you is the non-registered. I have this random outlier stock, so please ignore this. I'm trying to get out of this. Once it kind of gets back to profitability, then I'll just sell it. I don't mind holding it long term. It's just $230. But then in this account, I own the same VCE and then VFB. So that's a quick tour of the accounts, as well as that quick explanation at the beginning, kind of talking about the tax effects